Hey guys, welcome back to More Than a Mortgage. This podcast is all about storytelling. I'm your host, Gavin Sessions. I'm the leader of our mortgage brokerage, the Sessions Group. And what we want to do always is be a value before, during, and long after a mortgage transaction closes. And one of the ways that we can be a value to you is by hosting this podcast. And today I'm super excited to host a personal friend and also a real estate appraiser, a guy named Josh Darrow. He's a great guy. He's got an awesome story that you're going to really enjoy. And he's going to educate us and inform us about some of the mystique or the mystere of the appraiser world. So maybe I'm making something up that doesn't really exist, but I think that there's probably some uncertainty out there about what appraisers actually do, why they're necessary, et cetera. So we'll wrap that in to Josh's story. And then, of course, this is actually our final episode in our Becoming Findable series. So looking forward to asking Josh that question, getting his take on it as well. If you find this content valuable, we would really appreciate if you would like and subscribe. And we'll just jump right into it here. Josh, thanks for being here today. I really appreciate you making the time to do this.
You bet, man. It's good to be here. Thanks for having me.
You bet. You have to forgive me. I think this is my fourth cup of coffee, so hopefully I'm not too wiggly and too amped up today.
Hey, it's all good. You're in good company because I think I drank a whole pot to myself this morning too. So yeah,
love that.
Yeah,
love
we'll
coffee.
be jacked up together.
Fantastic. All right. So to get us going, it's sometimes fun to ask an icebreaker. I don't have tons of variation in these because also I think it's kind of fun to hear people's take when I ask a similar question. So I'll ask you this one today. This is, for me, one of the funnest things I get to do for my job, right? We're actually working right now, which I think is pretty cool.
Yep.
If you weren't working today, what would you prefer to be doing? What would you prefer to spend your time doing?
Man, what would I be doing? I would be, honestly, I would probably be hanging out with my kids. I'd probably be at the pool with my boys, or probably go to Roaring Springs or something like that. Yeah, I'd probably just be hanging out with the family. Work has been a little crazy lately, so we haven't had much of that. So yeah, I'd probably just be hanging out with them.
Great answer. We've heard that one before. I think it really speaks to the quality of the guest when they say, I think authentically say, hey, if I wasn't working, my family would get my time. That's rad.
Yeah, thanks, man.
Proves that you are at least attempting to be a great husband and a great father. So, and I know for a fact that you are both those things. So,
oh, thank you. I appreciate that. Likewise.
Well, cool. Thanks again for being here. Let's jump into this. Would love to hear a little bit of your story. So our first kind of segment here we want to talk about is how the heck did you get into appraising, number one? And we're sitting here in Boise, Idaho, and I know you're not born and raised in Idaho. So curious if you would help us understand how you got here to Boise, how you got into appraising, and we'll just get you going that way.
Yeah, cool. So I'm originally from the Southern California area, born and raised in Bakersfield, California. If you guys know where that's at. Yep. And then was born and raised there, and went to high school there. I was there up until like college age, and that's where I initially started appraising. So I was working at a clothing store in Bakersfield.
Try us. What's the name of that clothing store? Clothing store. I evidently had closings on my mind.
So it was a store called Wavelengths SBI, and it was like a skate surf, which is kind of funny. It was Bakersfield, and we're like 2 hours from the water.
Beach, yeah.
And we sold surfboards and we actually sold boards. It was weird, but anyways, yeah.
Was there a good skate community in Bakersfield?
Yeah, good solid skate community, and we sold snowboards as well. So snowboards, they sold really well. Skateboards sold well. The clothing obviously sold well. I think it was kind of like that original store. It originated in Morro Bay, California, which is obviously it's a coastal California community. Yeah. So it originated there. And then they opened the store in Bakersfield, and it just did really well. I think people were really intrigued by it. Like, oh, they sell surfboards here? That's weird. The skateboards and snowboards were obviously just kind of the norm. But I started working there, and I worked there for a good 10 years. And
that's a long time.
Yeah, a really long time. But it was like the most fun I've ever had. It was such a fun group of guys, and like loved my boss and all that stuff. It was a really good experience. But when I was there, one of my coworkers and friends just randomly was like, "Yeah, I'm gonna go, to this appraisal class down in LA, and I'm gonna, kind of pursue that." And I was thinking, well, I mean, I got to kind of look into some sort of career because I can't do this for the rest of my life. But that was like I was high school, early college age, working at that store. But it kind of like it was a little intriguing, and I was like, oh, maybe I'll look into it because the way that he painted the picture was like, you can make great money, and you can work for yourself, and the appraisals don't take that long to write, and you get you have some free time and all this stuff. And I'm like, dude, this sounds too good to be true.
Yeah.
This sounds really good. So, anyways, fast forward, like I ended up going to those classes, and we would carpool down like with a couple of other people to Woodland Hills specifically, and I took my appraisal courses there. And then I was able to find a guy to train me that had a larger appraisal firm in the Bakersfield market.
Okay.
So started appraising with him. And that's like one of the hardest parts of becoming an appraiser is like, you can take all the classes and you can do all the things, but if you can't find someone to train you, that's a very difficult piece of the puzzle. And I was very fortunate to find somebody to do that.
Yeah, that is fortunate. I mean, you and I have had this conversation, of course, off camera before.
Right.
I'm a mortgage broker. You're an appraiser. Obviously, you can be a really good resource for me. And then our small talk questions turn into hour-long conversations. But
yes,
I've learned a ton from talking to you over the years. And one of those things in particular is what you just said, which is, hey, it's one thing to get an education and to want to be an appraiser. It's another thing to actually be able to find someone to mentor you or apprentice you or whatever that a technical term is, right?
Yes, absolutely. It's really difficult because there's not much benefit in it for the supervising appraiser. It's kind of a drag to, and it takes a lot of time. It takes a lot of money essentially, and so, so I was very lucky to find somebody.
So it's different than some of the other career paths that would have sat in that chair, right? So real estate agents, of course, financial advisors, CPAs, estate attorneys, insurance agents, all of those, or myself, right? We go get a formal education and then we pass a test and become licensed. Yeah. And then it's like, well, have fun, go build your business. Good luck.
Right.
But that's not the case for being an appraiser.
Yeah, it's changed a little bit. Like when I got into it, there was a really low barrier to entry. There was no, I didn't have to necessarily have a college education. No one did. It was kind of just, you can get your trainee's license. You can become a licensed appraiser. You can even become a certified appraiser. There's like 4 license levels. Yeah. So trainee, licensed, certified, and then certified general, which is more kind of, typically geared for commercial properties and things like that. Okay. So yeah, you could pretty much go through like, go to the highest license level without having, any formal education. So that was appealing to me too, because it was like, oh, well, I can make decent money and I can bypass all the other stuff. I don't have a college education. But that was one of the things that appealed to me is that I didn't have to go through all of that. And I just wasn't interested at the time. And I have, sometimes I think, oh, maybe I should have done that. Maybe I shouldn't. I don't know. But either way, it worked out the way that it did, and it's been good. Yeah. So, it's been a really good thing. But like as far as, I did some moving a little bit. Like mainly moved from. I appraised in the Kern County market for many, many years. So Bakersfield. Yep. And then I eventually moved to Ventura, California, and I was there for about 10 years. And I met my wife there, and we had 2 boys, and met at a church there that we were both attending, and was still appraising in the Kern County market, like Bakersfield area, and then I also was doing some appraisals in the Ventura County market too. So as you can imagine, there's like you get the whole gamut of very standard homes in Bakersfield, and there's also some really complex properties and really nice, beautiful homes there too. But it's a very diversified market, or it's quite a bit more complex because you're dealing with coastal properties and things like that. So I've kind of
in Ventura versus
Ventura versus Kern County. So yeah, and then, I mean, just higher value properties with, stuff directly on the beach, like oceanfront and different types of views and stuff like that. So yeah, I think I left this part out. I started appraising originally around 2004, 2005. So I've been doing it just over about 20 years now.
Yeah.
And I've never gotten out of it. It's been a very consistent thing for me, which has been a huge blessing. Because there have been some moments where it's gotten a little bit dicey and slowed down a little bit. I'm like, shoot, what am I going to do? But I mean, the good Lord has paved a way, and it's been great. So
we've all been there, right? Those of us that are in sales and earn money from selling something, whether that's a mortgage, whether that's an appraiser, an appraisal, I should say.
Yeah.
Let's rewind just a little bit. So you were fortunate enough to get a mentorship or an apprenticeship. What's the technical term for that?
It's an apprenticeship, I would say.
An apprenticeship. Got it.
Yeah.
And you had said earlier, there's not a lot of incentive for a experienced appraiser to take on a trainee or a mentee or a mentor. I'm not sure how to say it, but But generally, they're creating competition for themselves, right? I guess that'd be the truth of the matter.
That's a big piece of it right there. I mean, you just nailed it. It's, not only is it the time that it takes and the, having to train someone. I mean, it's always time consuming to train anybody, right? But it's, I think it's the time piece as well as you're training your competition, which seems kind of ridiculous in a lot of ways. Because ultimately, and it's the same thing that I did, where I knew that I was going to train under this person.
Yeah.
And I knew that my goal was not to stay there. I knew that I was I'm assuming all the liability anyways. Why don't I just go out on my own and then have a good group of peers that I can bounce questions off of? Because obviously every property is different. Yeah. So it's not like every time I go out and do an appraisal, it's oh yeah, no problem. This is the same thing I did yesterday. Yep. That is not the case at all.
Right.
I'm not just doing cookie cutter CBH homes every day. So,
which we love those homes, by the way.
Yeah, we do love those homes. I love CBH.
Probably much easier appraisals.
They are. Those are actually, when I get those over, I'm like, this is fantastic because my job is a lot easier today.
The comps are all right in the same neighborhood, generally speaking.
Right. There's 4 right next door.
I love it.
Yeah. So, so I just knew I was I'm going to branch off on my own, and it kind of made more sense for me to do that. However, and I think it's a personality thing too. There's a lot of people that are even some of my appraiser friends and here and back in California, they would just prefer to work under somebody else. It gives them kind of it makes them feel more comfortable, and they have people that they can walk down the hall and say, hey, I did this acreage property today with a shop. How do you handle that? Or it's on a busy road, or, whatever the situation is. So, but I don't know. I mean, I think you can still have that, not even though you don't have a guy sitting in a cubicle next to you.
Sure. I mean, there's probably some great collaboration to be had out there, even if it's not in the same office. But not everybody's cut out to be an entrepreneur or a business owner, right? But somebody who may have interest in becoming an appraiser, there is a home for them to not have to be a business owner, it sounds like.
Yeah.
So,
absolutely.
Before we get too far down the road, I think there's, like I said before, I kind of teased this out just a little bit. Educate me. What does it mean to be an appraiser? Why are appraisers necessary? Help us understand what you do and who you're helping.
Yeah, great question. I could go into a lot of detail, and I won't. I'll spare you that, but I'll try to wrap it up in a way that makes sense. But I mean, there's been so many situations lately where I'm this is exactly why we're essential. Whether it's been different transactions where like for lending transactions, because I mean, like you mentioned earlier, or I don't think that we've talked about that yet actually, but because I do appraisals for private reasons and non-lending as well as lending. But definitely on the lending side, I see more examples of like where I'm reminded of like, okay, this is why appraisers exist. It's, we're there because essentially we're there to protect the buyer. We're there to protect the lender and the investor. And, just to ensure that the property is appraised at the accurate value. And that's exactly what an appraiser does. We're there to provide an unbiased and objective opinion of value that's based on market data. So
just because we have a contract that says buyer and seller agreed on $517,000 doesn't mean that we're going to have an appraisal that exactly matches that value, right?
That's exactly right. But I will say this, like, I think that this is really, really important. Like I have a lot of friends that are realtors and this comes up quite a bit, but I think that agents, realtors need to understand, and even lenders need to understand that the majority of appraisers out there, like we are not out there we're not like, we don't wake up every morning, grab a cup of coffee and go, man, whose deal am I going to kill today? Like that's not our deal.
I like the smirk on your face as you say that too.
Yeah. You're like, maybe he does want to kill
There's the
deals.
Reputation we were talking about. Whose deal am I going to light on fire today?
I'm going to ruin somebody's day.
Let's not do that.
Yeah. Yeah. That is really not what, and I think that sometimes appraisers have gotten kind of a bad rap, and there's a few bad eggs in every market. But no, my point in saying that is that I as an appraiser, I put a lot of stock in a sales agreement. Like I genuinely want to, if I can get there, I will, because I'm like, who am I to say that it's not worth this price? The only time I would say that does come into play is when there isn't adequate market support for something. And it happens every once in a while. I had one the other day that it's going to sound crazy and you're going to be like, oh, this guy's a bad appraiser, but it came in like $100,000 under contract.
Oof.
But there was an escalation clause, so it was no big deal. It worked out just fine. And they said like you pretty much they didn't waive the appraisal, but they said, hey, it doesn't really matter. They're going to come in with cash. They really wanted
Closing
it.
the gap.
Yeah. And so it worked out just fine. But there was literally, to this day, it boggles my mind. I'm like, why would you pay $100,000 over what it appraised for? It doesn't make any sense. I understand, just from a real estate perspective and a buying perspective, I just think it boggles my mind that people do those types of things when you have adequate market support for something different.
Because what you're trying to do, just to recap, you're putting weight in the contract, right? That buyer and seller have agreed that the market has dictated that this is fair, right?
Right.
And what you said is you're going to do your best to get there, right?
Yes.
Which is awesome. I love that attitude. I love that perspective. But sometimes the data doesn't justify it, right?
Absolutely.
So sometimes it's going to come in at 417, even though buyer and seller said it was 517, right?
Yes.
And so what data are you looking at that helps determine that, right? Because I think that would be the question. Like if I'm on the receiving end as a mortgage broker of an appraisal that comes in $100,000 low, my head's probably exploding.
Yeah, yes, exactly.
And I'm like, oh,
for
this
good
whole
reason.
deal is totally blown up, right?
Yes.
It's likely going to get canceled. This one didn't, to your point, but yeah.
No, yeah, this one flew right through and there was no issue whatsoever. But yeah, to answer your question, the way that appraisers would determine that is through the most recent historical market data available. So we're going to be looking at, like, after we go out and do an appraisal inspection, which is really basic, measuring and taking photos of the home and kind of jotting down overall condition, upgrades, that kind of thing.
Yeah.
15 minutes to an hour, depending on the size of the home, kind of a deal. It's pretty fast. But once we get that information back to the office, we'd compile the report and look for, and the biggest part of that process is finding the most recent, most similar, and most proximate comparables available. And when I say comparables, like truly comparable homes, not like, I probably shouldn't keep going back to CBH, but it's a good example, like, because everybody knows who CBH is. But if you have if I'm appraising a CBH home, I'm not going to compare to a Brighton or a James Clyde. That's completely ridiculous. So I think it's literally like an appraiser's job to find the most apples to apples comparison that we can find.
Like for like.
Yeah, exactly. So it's not apples and oranges. It's not, I'm going to compare it to a home on a half an acre to a home on a quarter acre. Typically, I mean, there are some cases where that's necessary because of the lack of data. Appraisers will branch out in time and distance and kind of, blur the lines a little bit in order to find some similar comparable properties. But yeah, ultimately it's based in market data and the most recent, most proximate, most similar.
So let's say in a CBH scenario, just to continue to role play this out, you've got lots of very similar comparables, generally within the same square mile, generally within the same square footage, the same era, the same build quality, right?
Yeah.
So it's like, we have lots of very similar properties.
Yeah.
And therefore we can justify this value looking at these very similar properties, right?
Yeah.
Let's say we don't have that, right? Let's say we've got a one-off home that's been built by somebody that's no longer even in business. It's not a subdivision that's on a couple acres. Tell me how we find comparables in that situation. And then often, I'm kind of feeding you where I want you to go, but
yeah.
And then often you probably aren't going to find exactly like for like things, right?
Yeah.
And so then there's a different method that comes into play.
Yeah. So that's a really good question. I would just say that again, it all boils back down to market value, and that happens all the time where it's like, this is like, maybe it's not an atypical situation, but it's a more complex assignment and there's just nothing available. And it's like, how am I going to handle this?
Yeah.
And at the end of the day, it's like I was saying, I mentioned a minute ago about, how we would have to expand in time and distance. And that's exactly what we have to do. So if I have to, like, say I'm doing an appraisal in Eagle and it's on acreage with a shop and a guest house and the whole thing. If I have to expand to Boise, I will. I'm going to try to stay in a similar price point market. Yep. I'm going to try. I'm not going to filter by price or anything. I'm just going to expand my search parameters as necessary to see what I can find. And then I can also expand, like I said, in time and distance. So I'm going to go back maybe a year. I don't like to go back further than a year, but I will if I have to.
And the reason for that is because
the data is so limited.
Right. The market can be very different, right?
Yes. And there's even a lot of appraisers out there that are like, well, I can't do that. I can't go back a year and a half. I can't go to Star. I'm like, yeah, you can. And then you just figure out a location adjustment that makes sense. And again, based on data, not like, I think this is kind of a common misconception with people is like, they think, a lot of people think that like appraisers have like a cue card in their back pocket that says like a pool is worth 10 grand or something. And it's like, that's not how it works. It's different in every market. Like a pool in my neighborhood might be worth less than a pool in your neighborhood, or
it could make a property worth less even with having a pool.
Yeah.
Sometimes.
I mean, potentially, yeah, it could be a negative.
Right.
I mean, I would argue too that like, not to get off topic, but I would argue like even in my neighborhood, we have a nice community pool. You guys have nice community pools in yours.
Yeah.
I would argue that you could say that they're worth virtually nothing.
And they don't cost nothing.
People don't like to hear that.
No, especially when I think the better part of 6 figures to have a pool put in your backyard right now.
Yeah. Seriously.
And to potentially have it be a detractor from your value, or maybe a net nothing, right?
I know. And but again, it's a build to suit type thing,
right?
Where like if I go out and do an appraisal and somebody's, like solar panels or put a pool in, like, how much does this add? I'm like, ultimately it's my job to tell you the truth. Like I can't fib and tell you like what you want to hear.
Oh, that just added 150 grand to your value.
Oh yeah. Oh my gosh. Yeah. Wonderful. This is fantastic. You're in the money. So yeah, it can be really, yeah, it's a difficult conversation to have with people because they want to, they want some return, but you have to, I have to have that conversation a lot and say, hey, this is something that you wanted and it's great. Like it may or may not add to value. So, and there, at the end of the day, to draw, kind of to bring it back to what we were saying, it all falls back on market value, or not market value. I'm sorry, market data. So like everything comes back to market data. Is it supported? Is there data for it? What would the typical buyer in this market pay for something like that? Maybe nothing, but.
So if I had to sum it up, I would say you guys are data-driven analysts helping to determine what something is worth based upon the most recent, similar, comparable sales data you can find.
Right.
But then you're tasked with having common sense as well, right?
Yeah.
And there is no cue card to say, hey, this is what this is worth here. And it doesn't necessarily translate from one neighborhood to the next or one market to the next.
Absolutely. Yeah, that's a great way to put it. And it's 100% true. It's just, there's a lot of overlap in a lot of neighborhoods, and then in other cases it's completely different, so yeah.
All right, let's keep moving here. So let's use our 517 example again. Let's say you're tasked with determining a value of that property. Who is your customer in that circumstance? Let's say there is a loan in place, right? And and whose risk are you trying to protect when you're out doing that appraisal?
Ultimately, the lender, the investor, and the borrower, is who we're really trying to protect in that situation too. I mean, it's, because again, like to kind of go back to what you were saying before, like just in a purchase situation where you can say that you're in contract at 517 all day long and like both people agree and there's been a meeting of the minds and stuff like that. But if there's no support, then ultimately an appraiser's job is to come in and tell the honest truth and say, hey, like there's just no support for this. And if you really want the home at that point, it's either you're going to, renegotiate, pay the difference, or it's a dead deal, unfortunately. And that sounds harsh, but it's just the way that it goes. Because at the end of the day, like I think people have to understand too that an appraisal in that case, it has to be supported. So if I send out something that's overinflated, then there are checks and balances. It goes through a lot of, QC and reviews and a lot of eyes on the report. So, and with technology the way that it is these days, AI and all the things, like there's a lot of tools that say this appraiser blew it. Like this isn't,
and that
this
happens
isn't
sometimes, right?
Oh yeah, it happens.
People are human and human error.
We had one, right?
We did.
It wasn't, so
you weren't my appraiser, but you were a friend in the industry that I trusted, and I was able to kind of escalate to you and get your third party opinion.
Yeah.
Was this right? Is this not right? And you really helped me to navigate back through the lending side of things and get the appraisal corrected.
Well, good. I mean, I love that. Like that doesn't happen. So I was really thankful because I've tried to do that in the past for people, but but that one was pretty bad.
Yeah.
So I'm glad that it worked that way. Doesn't always.
Right. It doesn't always work out. So one of the things I try to tell my customers is, hey, when an appraisal is required, which is most of the time, right, in a loan transaction, occasionally we have things like appraisal waivers, which on the lending side or the buyer side we love because it makes things faster.
Yeah,
we're not trying to put you guys out of work, but for any deal that requires an appraisal, which is most of them, I try to communicate to the customer, hey, this appraisal is really for your protection.
Right.
It's for your best interest, right?
Yeah.
Sure, you agreed to pay $517. But do you want to overpay? If the market doesn't support this price, do you really want to get yourself out over your ski tips and be in a negative equity position where you potentially paid more for the house than it's worth? And every person with common sense should answer that question of, no, I don't want to put myself out over my ski tips and be underwater on this house, right? Depending on how much cash they're bringing into the transaction.
Absolutely. I think it's really, And I love that you do that because I who knows, like what the kind of general practices in the lending side, it could be that they're like, frustrated, pissed off at the appraiser too. I don't know, but I love that you will educate people on the process and the value of it, because even like, I mean, I do a lot of appraisals just on the private side, like for cash transactions.
Sure.
People will call and say, hey, like there's not going to be any appraisal on this. Can I just get an appraisal from you for current market value? I just want to make sure that I'm not overpaying. I'm like, yeah, absolutely.
Have you ever had that happen before where it was a cash transaction, the buyer didn't need an appraisal, they wanted one, you delivered an appraisal to them, it was, wonky compared to where the mutual agreement was. Have you ever had a buyer back out?
I just had one.
Really?
Yeah. And it was pretty bad. So like, without giving too much detail, it was this really cool home. Like I think it was a Brighton home. It was a nice, good quality home.
Yeah.
But it backed up to a busy road, and they were in contract like 50 grand high, and the listing agent didn't neglected to tell, like, okay, so dad lives out of state. He's paying cash for the house for a family member to help. And they had like an agreement, whatever, like, oh yeah, you're just going to pay me back. And, so you don't have to, whatever. But, he called me and said, hey, can you do this appraisal? And I go, yeah, for sure. No problem. And he's like, I'm just kind of like, I don't know. Something doesn't sit right with me. I'm like, yeah, for sure. So I did it. And then, come to find out there was like 2 comps that backed up to the same busy road, same builder, same floor plan, same bed, bath count, garage, everything was the same.
So very similar.
Very, very similar. We're talking literally apples to apples. Same busy road, the whole thing that had sold within the last 6 months, 5 to 6 months. And they were 50 grand lower than their contract price. And the listing agent neglected to show him those comps.
Ooh, to show the seller
To
when
show
they listed?
show the buyer.
Show the buyer.
Yeah. So when I was there, like doing the appraisal inspection, the listing agent met me out there, and she just talked about like, everything that she said was like about the seller, and she wasn't like double ending the deal. She was the buyer's agent, and there was a listing agent. Yeah. And she was like, oh yeah, he won't move off the price. The seller won't move off the price. He bought it for X and he wants to, recoup that amount. And I'm like, who are you representing? Are you representing your buyer, or are you representing the seller? Like, this seems weird. And then when I put the report together, it's 50 grand under where they're at in contract. And so I called them and was like, hey, I sent them the report, and then I followed up with a phone call, because I was like, I know I'm going to need to talk to him about this. I know I'm going to need to address this and make him feel comfortable about it. So after we discussed it, he was like, yeah, I didn't even know that those were there. I had no idea that those existed. And I was like, well, you can't overlook these. Like, it's just
and you're talking
straight
to
up
the
fraudulent.
buyer at this point.
Yeah. Sorry. Yeah. Talking to the buyer.
And you would think that somebody on the selling or the listing or the buying side, the agency would have informed them.
They should have.
Got it.
Yeah.
They were not
just good practice.
Properly informed, and then the appraisal surprised everybody.
Yes. And I always tell people, I'm like, hey, if it's worth it to you, then you do whatever you want. People pay over appraised value all the time. Like, and I'm very confident in what I do, but at the end of the day, if it's worth it to you, then, go ahead.
There's something to be said that the market brought buyer and seller together at that price, right? And so it doesn't necessarily mean that it shouldn't be sold for that, but there just wasn't supporting data to justify it.
Yeah. And ultimately at the end of the day, my job as the appraiser is to give them the truth and just to say, hey, this is what I found. This is the most recent market data available, and this is where it should have been priced, in my opinion, in and around this number. Again, like, I think it, just as a side note, I think it's kind of silly that appraisals have one number on them. Like the appraisal forms, it's like they want one number specifically.
You mean even Zillow gives you a nice little range on the Zestimate, right?
Yeah, you're right. So I really do believe that it should be more structured more as a range, because I'm again, I'm confident in what I do, but I am not that good to pin it on like 517. This is exactly what it's worth. This is exactly what someone's going to pay for it in the current market.
Yeah.
There are, there's a range in values for every home in every neighborhood.
Yeah.
So yeah, but I don't know. I mean, if it's worth it to you, then go for it. Spend the extra money. But my job is just to show people like, this is what the data says.
Super unplanned question, because that's
Sure.
what we can do here in this environment. We're in Idaho now. You guys relocated, and maybe we'll get back to that story here in a minute, but we're sitting here in Boise, Idaho. You are an appraiser in the Treasure Valley. Idaho is what we call a non-disclosure state, right?
Yeah.
Which to you and me means a lot. To the listening audience may not mean anything. So help me understand, if you would, what's a non-disclosure state, and how does that affect what Zillow says someone's home is worth?
Yeah. So I would say it does make things a little bit more difficult. I think because people see, like I've gotten into, I'll try to say it this way. Like I've gotten into the habit of looking at Zillow prior to going out to a refi or a purchase or what, especially like if I'm going to meet somebody face to face.
It's a data point.
Yeah, but at the same time, like I'm not relying on it. Like I don't misunderstand. I'm not relying on it for my data.
Right.
I don't care what Zillow says, because I know that, it's going to sound really arrogant, but I'm better than Zillow. I know
Mic drop.
Yeah. But
say that again just for fun.
Yeah.
I don't care what
Zillow says. I'm far better. So yeah, just know that. Anyways, but I will look because I know that the people that I'm going to do the appraisal for have likely looked themselves. So, and I just kind of want to know, where's their head at? Like, especially before I send the report out.
You almost don't have to ask them where their head's at, because it should be assumed that people have looked at Zillow or Realtor or whatever other readily available tools out there.
Right. And sometimes it's fairly accurate, but the majority of the time it's definitely not. And it can't see those factors like a busy road or a view, or sometimes it's low, sometimes it's high. It's a case by case. Sometimes it's right on the money. Right.
And it's different by state, right? So sorry to go back.
Yes. No, I'm sorry. I'm getting you off track.
That's okay.
Yeah. So as far as the non-disclosure part of it, like there's plenty of data that's online that you can see, like the typical homeowner can see, but they don't have all of the data, like MLS, like feeds it. I don't know exactly how it works, but I know that it's a limited amount of data that is provided to Zillow. And I know that that's kind of fluctuated over the last few years too, for various reasons. But yeah, I mean, the general public doesn't have access to all the information that a realtor or an appraiser has. Like MLS, even though it's a non-disclosure state, the appraisers have access to all of that information, just like realtors do and stuff like that. It can just be a little bit tougher, like when an appraiser goes in, like part of the job is we have to go in and analyze prior sales of the subject property and the comparables.
Right.
Sometimes the prior sales data is there, sometimes it's not. Usually we can see like a closing date or a doc number or something like that, but we don't know, like, well, if it was a sale, what did it actually close for? Or if it was a private transaction, especially, it's like, we don't know.
Right.
So, on our side, it's fairly easy because we just throw a disclaimer in there and call it good. It just is what it is.
Yeah. So one of the things I always tell people is Zillow is directionally accurate at best, right? Like your fingers stick it in the air, which way is the wind blowing? Yeah, it's a good place to potentially just get an idea. What I was trying to get at a little bit, and this is not against you at all, is in Idaho, we're a non-disclosure state, which means we don't share with the county when we buy or sell what that price is, right? Now, you can if you want,
right?
But you're incentivized not to, because Ada County or Canyon County or any of the other Idaho counties employ assessors to independently determine the value of a home, and they tax you against that assessed value, which generally is less in the state of Idaho than the market value. So we benefit from that from a taxation standpoint.
Yeah.
But That also means that that sales data is not publicly available, right? Because it's, as a consumer, I'm incentivized to not tell Ada County what I sold my home for, what I bought my home for, right? Because in theory, then that would help keep taxes lower. But that also means the AVMs, the Zillows, the realtors of the world, they don't have access to that data either, right? And so that's where I would say, depends on the state you're in, right? Maybe how accurate Zillow is from a starting standpoint.
Absolutely. Yeah. I think Zillow is only as good as the data that it's fed.
Correct. And in Idaho, being a non-disclosure state, it's fed less than other states. So challenge to whoever's listening, go look at your address on Zillow and see if you can see what the sold price was. I promise you that, promise is a strong word, it's unlikely you'll see that.
Yeah.
But if you move to California, or if you go to Washington, or if you go to any of the disclosure states, you'll probably see it there.
Yes.
So they have access to a lot more data. So theoretically, then maybe the values are a little bit better. I don't know. Still trust carefully, right? Tread lightly.
Yeah, exactly. And again, like I just, it's just something that it can be fun to check it out every once in a while and just get an idea.
Yeah.
But I wouldn't place too much stock in it.
Right.
And I will say that it typically tends to be more accurate in kind of your more cookie cutter neighborhoods where you're surrounded, like there's a pretty wide swath of, a good radius of other homes that are similar to yours. Like that's where it's going to be probably the most accurate, the newer housing developments, because you're eliminating like the condition question at that point and upgrades and things like that. Cause you're like, oh, well, this is a newer housing tract and all these homes are they're very similar in quality and age and whatever condition, site size, all those things. So it can be more accurate in those situations. But as soon as you get into the more, like you're in the North End or you're up in Boise Heights or something like that, it's like, it's probably not going to be very accurate.
Yeah, makes sense.
More specific property.
Okay, cool. Let's move on just a little bit here. We'll just keep rolling. We've talked about doing appraisals for lenders, right? So back to our 517 example, buyer and seller come to an agreement. The guidelines require an appraisal. As a mortgage loan officer or an agent or a realtor on either side of the transaction, none of us get to pick who the appraiser is for the transaction, which keeps it probably better, right? It keeps it third party, right? We don't get to decide, hey, otherwise maybe I would give all my appraisal orders to you, Josh. That'd be really cool. But
it's too bad.
Then we would potentially have a conflict of interest, right? And so
yeah.
Orders are assigned to appraisers through AMCs, which is an appraisal management company, or through appraisal panels. But the goal is that an order would go to an AMC or a panel of appraisers that the lender has some sort of relationship with, right?
Right.
Would be the goal. But I don't get to pick necessarily that they all go to you.
Right.
Some of mine might go to you sometimes, but I don't get to dictate when that happens.
Correct. Yeah. So that's definitely the case. I mean, it used to be when I first started appraising, I would have my own, lenders that I would go to and solicit business from. And so that was really common up until the market crashed, like 06, 07. Everything changed after that. So, but yeah, you're absolutely right. You can't, unfortunately, pick your own appraiser. There are times like if somebody's doing a HELOC or something like that and they're working through a credit union or some other private bank, they might be able to get their own appraiser, like in certain situations. But in most lending, transactions, it's going to be banks picking the appraiser.
So that's one side of the appraising business, right? You actually have another side of the appraising business that you may actually prefer, and I want to put words in your mouth, but so if you're not appraising for lenders, who are your other customers?
Yeah, so I do a lot of non-lending and private work, and I would say like for divorce and estate, like a lot of it's not I hate the way that they say it, but it's a like date of death appraisals. It's so like morbid and depressing, but or otherwise known as like a step up appraisal or a step up in basis, where people typically need that. Like if a person passes away for an estate, it steps up the value from when mom and dad purchased it, or maybe dad passed away and He purchased the home back in the 80s or something like that, and spent 50 grand or whatever it was. And now the home's worth 500. Like it's really to shield people from capital gains. Like if they go to sell the house currently, like it steps up the value to a more current date. So anyway, so I do a lot of that type of work, and even just like helping people that maybe have inherited property and they just need a current market value because sister wants to buy out brother, that kind of thing. And like I kind of touched on a little bit ago, private appraisals for if someone's paying cash and they need an appraisal. They want to make sure that they're not overpaying, that kind of thing. I also I help a lot of realtors too. If they're really having a hard time pricing something that's more complex and they're just stumped and don't know what an adjustment would be for an ADU or a shop or 5 acres or whatever it is, or the view that they have, I can help step in and do appraisals for those reasons. There's a lot of different reasons for appraisals, but obviously I don't enjoy doing the date of death appraisals or the divorce appraisals to some degree, only because I know that I'm dealing with someone who's lost a loved one or they're going through a separation, but it is essential, unfortunately, and someone's got to do it. And I shouldn't say I don't enjoy it. I do enjoy it. In fact, in those situations, it's actually a great opportunity for me to, it feels like it gives me a little bit more purpose, like than just the mundane day in, day out, like appraisal work. And I'm able to kind of come alongside people when they're having a hard time and try to even use it a little bit as a ministry if I can. And so that's been pretty cool. Actually, it's those times are tough when I'm dealing with people that are going through those situations, but it's been good too, and pretty fruitful at times. It can be. So yeah, but
I love that perspective. Let's not gloss over that at all. For just a point of clarity, though, when you're doing an appraisal for a private party, a cash sale or an estate or whatever the reason is, you absolutely can choose who you want to be the appraiser, right?
Yes,
and
totally.
So you would say, hey, this is an opportunity for me to put myself out there and be chosen, right?
Right.
Kind of goes back to our question we said we were going to talk about, which is becoming findable, because then you actually have the ability to put yourself out there and be chosen to help somebody. I love the ministry aspect of it too, right? So we're in for-profit and businesses, right? The Sessions Group is a for-profit mortgage brokerage. Your company is for-profit, but at the same point in time, I truly believe that the whole purpose that we're here is to be in ministry, right? Like we are full-time ministers of the gospel, and sometimes it's through a mortgage, or sometimes it's through an appraiser, an appraisal. Sometimes it's through, I don't know, fill in the blank, whatever. But one of the things that I daily pray for is that God would help me to have a heart to just be in ministry to whoever it is I get to talk to today, right? I don't know who that's going to be throughout the course of a day, whether it's my wife or my kids or who knows, right? And I think that's the same thing that you're basically saying. So
and I think it kind of keeps things lively and spices it up a little bit, because if it's the same thing day in and day out and there's no real purpose to it, then it's if it's just collecting a paycheck, that's pretty boring, so it's cool.
There's potentially a couple people, different audiences listening to this, right? Our goal is that we go far and wide, but maybe speak briefly to a young person or somebody that's possibly thought about a career move into becoming an appraiser. So that would be one angle. Another would be you kind of did the forbidden thing, which is you're self-employed and you changed markets. That's really complex, right?
Yes.
Not impossible, but you guys were living in Ventura and COVID happened, and we can get super detailed or not based on time. But somehow you decided we were going to move to Idaho, and you were an appraiser that was established in a geographic market at the time. And there's complexity to uprooting that business and moving to a new market. So why don't you tackle both those questions, whichever one you like first?
So I would just say, just to keep it brief, if there is somebody that's, that's trying to get into the appraisal business, the the thing that I would say, like, I mean, go through all the appraisal classes. There's tons of online courses that you can take that check all the boxes that you can call, and they'll get you lined out and be like, yeah, I mean, it's going to take you a couple of months or 3 months or whatever. Then you got to pass an exam. To be honest with you, I don't know completely like what the steps are now. It's been so long ago that I did it that and they're constantly changing it.
Yeah.
So I don't know exactly. I don't even know if you have to take like a trainee exam anymore.
Okay.
So yeah, I'm not sure, but
not to throw you under the bus, but if they're interested, you would encourage them to look into it. It's been a fruitful career for you.
It's been a good career for me. It really has. It's been fun for a lot of reasons, and it's been a good career. But I do think that we're going through some changes, like just as technology improves, and especially with AI and all that stuff. I mean, I still think that there is definitely a place for the appraiser. And again, I mean, like I see that every day where I'm like, there's definitely a place for us still.
Yeah.
No doubt about it. Like there's just, if appraisers went away, we'd have some real problems because there's just, so I do think that there's a place for appraisers. We're still very valid in the market. But I do think it's just changing. So I think as long as someone understands that there are potential changes in the future, they, just say, buckle up and get it on. Like, I mean, it's just like anything else. Like you can say that for any profession, I'm sure. You know, there's a lot of changes, just period, in the world right now, especially with technology, AI, all the things. But yeah, I mean, I would encourage anybody, if they want to get into it, to go for it. I think the biggest part, though, again, is the, finding a supervisor is very, very difficult, and this is not going to be popular, but just be aware that you may have to work for peanuts for a while and maybe for free. Like, be willing to, have a good work ethic and really show up and yeah, I mean, you may not make much at first, but it will be worth it eventually. But you just gotta buckle down, and if you can find somebody to train you, that's the biggest. I would jump on it. It's a good deal.
So you've officially warned people that, hey, AI will have an impact, right? And I think that we'd be naive to say that AI is going to go away and not have an impact on any one of our career paths, right? It just will. And then you mentioned thoroughly, hey, another barrier potentially of entry is finding that apprenticeship situation. So
yes,
cool.
Yeah. All right. Second question. Remind me.
Yeah, I'm glad. So it's a good one because I think it really helps us answer, how did you become findable when you moved markets, right? If you think about it. So you were established in California, Southern California, as an appraiser. For lots of reasons, you decided to move your family to Idaho, and I think you guys have been thrilled with that decision.
Yeah.
Right? You love it here.
Yep, it's been good.
But you had to effectively maybe start over, right?
Yeah, I did. I had to start over completely. And I knew that it was a fairly calculated risk when we decided to make the move, only because the market was really hot here and it was hot everywhere.
Yeah.
So it was kind of like around COVID time. And yeah, I had that feeling and knowledge, and I felt comfortable enough to make the move because I just knew, like, okay, there's a good likelihood, a high likelihood that I can. At the time, I was doing mostly lending work. I was doing some private work too, but I knew that I could just go in and sign up for all these appraisal management companies, which is kind of how it works. Like, if an appraiser is doing lending work, that's what we would do, is go online and find appraisal management companies to sign up for. And, it's pretty much as easy as that. As long as you're qualified, they're going to send you work.
Got it.
So
because again, go back to, it has to be objective as an appraiser gets decided or chosen for a lending position.
Right. Exactly. Yeah. So yeah, I got a lot of work when we first got here, and it was great. And then the market tanked after, for the lending side, it slowed down. I shouldn't say it tanked, but it It slowed down significantly. Prices definitely went down, and like it dried up overnight, like for appraisal work.
Well, I mean, yeah, interest rates went to the 8s.
Yeah.
Towards the latter half of 2023, right? So we had come from rip-roaring 2021.
Yep.
22 was even still good. And then things in 23 kind of started to go the wrong direction. And all of us in the industry, whether we're agents, lenders, mortgage brokers, appraisers, we all had to feel that.
Yeah, absolutely. So yeah, that was a pretty key time for me as an appraiser. I was still getting a little bit of work, but ultimately it was like it pretty much dried up. So I had to go back to the drawing board and kind of I had to rethink everything really. It was like, okay, well, what am I going to do? Am I going to maybe I need to find something else to do? I wasn't really sure. And it was pretty it was a pretty stressful time, but yeah, I mean, I'd always wanted to do more private work. Like, again, I was doing quite a bit, but it wasn't a ton. And so, I just kind of had to reinvent myself a little bit. I had to do a lot of website work, and some marketing type stuff. And in order to tap into the private side of the business, because there is a whole nother appraisal world out there that people aren't aware of. And they don't, and a lot of appraisers that I know, they don't even want the work, which blows my mind. I'm like, you could be fairly busy, but you just choose not to. So I kind of had to reinvent myself, a lot of website work. Google has been a big one for me.
Okay.
And reviews are huge. Appraisers don't do that at all. And I don't understand why, but that's huge. People care about that stuff. They want to know that who they're buying something from is, they want to make sure that the person is a stand-up person and they can do the job, and they can get that information through Google reviews a lot of the time. So a lot of it's just very basic stuff that I had to do to kind of reinvent myself. And so that's been pretty huge. And then also too, like word of mouth. Like like I was saying before, I mean, I have a lot of friends that are real estate agents, and so I get a lot of work that way too, like just through word of mouth and referral. So yeah, I mean, it was definitely a difficult time to figure it all out, but it's really been great. And I not to church it up or anything, but the Lord is a huge part of that, obviously, because I felt like he kept kind of putting that in the back of my head. Like, you need to do this. Like, this is a good way to go. It's a good way to diversify your business and stabilize it a bit, so you're not, completely reliant on lending work. And so, yeah, I mean, he kind of paved the way, and I just said yes and walked forward. So it worked out really well. I'm really thankful that it worked that way, because it could have gone the opposite direction.
For sure.
But
I mean, if we look back, COVID was kind of the catalyst for helping you guys be able to relocate in a hot market, right?
Yeah.
I don't think any one of us realized the positive impact that the COVID era would have on real estate and all of us that are associated with the real estate industry. It was wild.
It was crazy. I thought it was going to go the opposite direction.
It was a great time to either start a business or relocate and start a business.
Yeah.
But then, of course, that wasn't real life, right? So we benefited from it. But then at the same point in time, what goes up usually will not stay up. It doesn't mean it has to come all the way back down, but it came down pretty quickly, right?
It sure did.
And that was another kind of catalyst for you to realize, crap, I need to diversify here, because this lending side of this business is not going to continue on at that clip forever, right?
Right. Yeah.
So that's good, right? I mean, that was a really good season for you to be able to work through. Obviously hard and challenging, right? It never feels good to have your business dry up. I've been there.
Yeah.
Not a good feeling at all, but a good catalyst to realize that, hey, God was inviting you into something maybe a little bit different, diversification and just a different way to do it. So
Yeah, absolutely. It was hard, but it was good and necessary to get there. Cause I think too, like, I really think that, like, when you're in those desperate times, like, I mean, I would say that desperation drives success, because when you're at your bottom, I mean, you know, you're scratching for the top. Like, you're trying to just keep your head above water. Whereas if you're just kind of cruising along and things are, status quo, and you're making decent money and you're able to put food on the table, that's just a comfort position. Whereas when you're uncomfortable, I think as long as because I also had a time there where I was just bummed. I was super just like depressed. I'm like, dude, what am I going to do? This is not good.
Right.
But once I got over myself and stuff, I was like, okay, well, I can't be here forever. I got to do something different here. I got a family that relies on me, and this is not healthy. So I need to, quit drinking beer. And I'm just kidding, but sort of. But no, I just needed to do something different and have a different mindset. But I do think that I was a little on the desperate side, and it was like, well, I mean, I'm kind of glad I'm here, and I'm glad that the Lord had me there, because that way I was able to kind of, dig myself out. But obviously it wasn't all, again, I'm not going to take all the credit.
Yeah.
But,
A more sustainable business, right? So
absolutely. Yeah,
desperation or just the kind of the bottoming out of the housing boom that we were in led you to diversify and become more sustainable, which I think is awesome. So if I could just, kind of summarize that, it was kind of back to basics of really good website marketing and asking people for reviews and building relationships with referral partners, real estate agents and others. Right. And
yes.
And that's worked for you is what you're saying.
Yeah, it's been great. It's really worked well. So yeah, and it's helped me. It has helped me become more findable when people need me. Yeah. So yeah, because that's the biggest thing, is just for me. Like, I want to be visible. So how do people do that nowadays? And to be visible, it's most people use the internet.
Right. Yeah.
So. Anyway, yeah. So that it's been a big deal, very influential. So, yeah.
Well, thanks for being here today. People can't choose you if they're in a lending transaction, so that's off the table.
Right.
But I think you have a great impact and opportunity to be able to help people that are able to choose you, whether that's an estate situation, a divorce situation, whether it's a cash purchase situation. Maybe you're a real estate agent that has a question and doesn't have a great relationship with an appraiser. You've been super valuable to me over the years, both personally and professionally. So I'm grateful to you for that. Let's just assume that through this today, someone thinks they know you a little bit more than they did before. And I like Josh, he's cool. And maybe I could trust him, right? That's what we're looking for here, is know, like, and trust. What's the best way for somebody to get in touch with you in the event that they want to ask you a question or potentially hire you to help them?
Yeah. So I would just say that the best way to get a hold of me, I mean, I can give you all of my information as far as phone and email and that kind of thing. But I mean, like I was saying, Google is a great spot. I'm
just give us the name of your business right now.
Okay. Yeah. So Home Appraisal Incorporated, that's my business. And you can go straight to Google. You can go to Home Appraisals, idahomeappraisals.com.
Okay.
Also Boise Home Appraiser, you'll find me there too, .com. So you can find me on Facebook, Instagram under Home Appraiser, or Home Appraisal rather.
Perfect.
So yeah, you can get me almost anywhere. So, and I do encourage to, like, especially it doesn't matter whether you're a real estate agent, realtor, lender, homeowner, if you have an appraisal question, it doesn't matter whether you're going to give me business or not. I don't really care. I mean, it's great if it ends in that. But if you want to know more about the appraisal process, or you're confused on something or whatever, feel free to give me a holler. That's what I'm here for. And I love people. I love talking to people about it. And I'm happy to provide that value if it's helpful. So
I love that give first mentality. That's good.
thanks, man.
All right, guys, we're going to wrap it there. If this content was valuable for you, if you enjoyed this conversation, we would really appreciate it if you would like and subscribe. If somebody comes to mind in your life that you think this conversation might inspire, or maybe they might benefit from listening to this, watching it, please share it. That'd be awesome. Thanks for tuning in today. Josh, thanks for being here today. And we're going to wrap it there.
Right on. Thanks for having me.